Hey guys, hope you've all been well. I wanted to give everyone a quick look at a pretty revolutionary tool that we just came out with that is now allowing us to combine multiple metrics on Santiment into one ratio or one equation to allow us to really enhance our analysis of how markets are looking at any given time, do research at a more extensive rate than we were ever able to do before. And I'm excited to show you guys a bit on how it works. What we're looking at right now is our daily active address divided by a daily active deposit ratio that I've just created. You guys are probably well familiar based on some of our other videos that we really like daily active addresses in particular, and I've also like to look at active deposits on occasion. We're obviously looking at Ethereum's right now, and I'm going to quickly show you exactly how I put this together. I'm going to close that out for now, and I'm going to go to active addresses. I'm not going to apply it just yet. I'm instead going to click on active deposits and see how they're now both of them together here. I'm going to click combine, and I've got X1 representing daily active addresses and X2 representing active deposits. Instead of adding them together, I'm going to divide. We have addition, subtraction, multiplication, division, and exponential math formula options now. So the possibilities are pretty endless, as you might imagine. I can't combine them yet because I have to name them, so I'm just going to say DAA divided by DAD, combine. Now I'm going to apply, zoom in, and this is what we have. Generally speaking, higher is better for this ratio, and the rise that we see like this is a good indication that a long-term bull run might be happening. We're of course looking at 3 years of data, so right now it's a pretty macro look. But what it really shows is the alpha that is possible with it. And right here, right, showing the arbitrary number, if I look at the top left here when I hover over it, it's at 27.5, which really doesn't mean anything on its own, other than the fact that there were 27.5 as many times as many active addresses as there were active deposits. And then it dropped off a cliff, getting as low as 6.73 on May 18th. But look at the time that you could have reacted before Ethereum's all-time high by having 27.5 on April 24th, and then by April 28th, it was at 9.3. And this was still while prices were rising. But this could have been kind of an alarm bell to you if you were watching this going, it looks as though active deposits are really starting to gain some steam compared to the address activity. And that may not be clear if I were to simply stack, address activity and active deposits on the same chart. But this makes it very simple to sort of see between the lines a little. And you'll notice that, about 10 days after this big drop off, that's when the price dropped off. So you had adequate time to react to what this metric was telling you. You can see, smaller versions of, like these big spikes followed by a big drop off where the price starts to decline. These here as well. Notice on Black Thursday, about 17 months ago, March 2020, we had that huge spike going positive for address activity. This was a good sign that prices were going to recover because we hadn't seen anything this high other than right here in the past year and a half or so. So generally speaking, a rise is good, a decline is bad, and it's not a perfect science by any means, but when you really see huge extremes like this, that's a pretty good alpha sign and something that I think is really cool to explore. And I kind of just stumbled upon it by using these combined metrics together on Sandbase. Another example would be active withdrawals here. So active withdrawals minus active deposits gives us some interesting sudden jumps in the math formula, and prices do tend to do some interesting things around these jumps. Another one I've done is average MVRV. So you'll see here the expression where it has 7 different types of formulas that are all representing different time framed MVRVs. We have the 1-day MVRV, 7-day, 30-day, 60-day, 90-day, 180-day, and 365-day MVRV, dividing them by 7 to get the average, subtracting by 1 to give it kind of a ratio where positive is good, negative, or I'm sorry, positive in this case means it's overbought, negative in this case means it's oversold and a good buy opportunity. And it shows some pretty good alpha here too, just as you would expect from MVRV ratios. This is more of a way of blending them all together to give you more of a smooth experience without having to focus on one specific time frame that might only be good for mid-range or short range or long-term range. This kind of combines them all into one to give a zoomed out perspective of when MVRVs altogether look good or look bad. In this case, as we've gone over in previous videos, when it's negative, generally a good time to buy. Good time to buy. This was Black Thursday once again. Good time to buy this whole chunk here. And then, of course, when it's really high like this is the time to take profit. This gave us, on November 29th, that's when it topped out. And then by give or take 2 weeks later, that's when the December 2017 price top came in. So long story short, there are a ton of possibilities here, different ways you can go to combine metrics and experiment, find new things that myself and the staff here at Santiment have not discovered yet. And I really hope you enjoy it and explore it. And I'm looking forward to having some great conversations with you guys about exactly what you stumble upon. So hope you enjoyed this. Let me know if you have questions in the comments, and take care for now.